Good morning from Chicago traders. It is Wednesday, the 3rd of March, 2021. This is episode number 1948. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. First things first, let's get a mic check, please. Just let me know if I'm running hot. I can never know because Windows 10 presumes to adjust my mic for me all the time despite turning off all those switches, but I don't want to blow out your headset or speakers. Let's hop right in. There's a lot going on today. I'm going to try to keep this as short as possible and not go into too much detail. This morning, risk off. It was actually relatively balanced with mostly risk on ish behavior. And until the ADP number came out, and then pursuant to that, the fundamental products, the fundamental assets, um, sold off. I'll pull up a chart of gold and the 10-year. The overview chart that I use, and you'll see that the basis of the sell-off after ADP. Really, it started before ADP, but the basis of the sell-off after ADP really started with gold and the treasuries. So, in that regard, I'm seeing this as a sell-off that has a lot of foundation or breadth, so to speak, not breadth in terms of advancers versus decliners and the New York Stock Exchange, but breadth in the true meaning of the word, meaning kind of a good foundation or good broad basis for selling off. So it'll be interesting to see if this sell-off is going to be seen as below value, and therefore we start to respond back up on the open. This will be interesting. I'm seeing some indications that it's got a bit of a foundation here or some support, but we'll talk about that for a minute. The thing that is front and center still is the yields on the U.S. Treasuries. We'll peek into that just a hair. But also ADP came out and missed this morning. For those of you who don't know, ADP is a payroll processing company, a very large private company, has a lot of the bigger contracts to process payrolls for some of the major companies, blue chips, and so on. And they release their own number on the Wednesday before non-farm payroll Friday, which is in 2 days. And they tell us what the employment change is based on their payroll processing service. So they give us what's expected to be a little bit of a peek into the future. And they came in at 117,000 employment change, plus 117,000. However, the expectation was plus 200,000. And I think some estimates were plus 225,000. So it missed pretty well. The prior is 174. And as a result, the dollar had a bit of a whipsaw, and with it go gold, silver, the bonds, the 10 years, the Treasury complex, and that has knock-on effects to, of course, when the futures, when the Treasury futures fall, yield increasing makes the cost of borrowing more expensive, which most companies are reliant on, and that makes the cost of debt more expensive, which eats into earnings, and so on and so forth. And it has a tendency, yields increasing have a tendency to cool off capital expenditure and investment. So that's what we're looking at. I'm not trying to teach you the fundamentals of economics here, but that's the kind of high level BuzzFeed a BuzzFeed summary of what we've got. The other piece is the $1.9 trillion stimulus. This was hoped to be a bipartisan push. Recall that a year ago, $2 trillion were approved by the Republicans and the Democrats together to help with the pandemic response, and another 850 billion was pushed out later, closer to the election, sometime in the summer. And now Biden wants to push out 1.9 trillion, and the Republicans are not wanting it. They think that 600 billion is enough, and so the Democrats will have to go it alone to get this $1.9 trillion approved in the Senate. They believe they have the votes. And so we'll see. And the market's paying attention to this political drama. And it's kind of annoying that politics are always central to, have become so central to all aspects of our lives. But this is why I'm covering it. It is not to get into politics. And then also vaccine. The White House believes that by May, all persons in the U.S. who want to be vaccinated will have been vaccinated, giving a boost um, to what the market can do to businesses going back. Right. So these are the main components here. We have moved quite a bit. We have quite a bit of range covered. The pre-market summary sheet here, of course, released before this range was put in, and actually it does cover it 44.75 points, and the overnight inventory is the volume above the prior day's close is mostly long, but that kind of cancels itself out here with us being below yesterday's close and having pushed below yesterday's low as well. Multi-distribution profile turning into a trend-based profile down, and that's where we are today. The key pieces, crude oil inventories, looking for that to be released, and there's some stuff going on with U.S. sanctions against Russia and their reciprocal response. OPEC Plus will increase output by 750,000 barrels per day in April. We're seeing crude kind of blow that off. It traded lower yesterday, but has taken all that back, and so on and so forth. Let's dig into what was expected yesterday versus what we got here in our review segment. Let's get through that real quick. The primary scenario yesterday was a very choppy open, sideways open. We were opening in the prior day's high volume area at the top of the range. The prior day had taken out the prior high, and the expectation is we would take out this high again in yesterday's session, and then a minor pullback, and then the expectation is we're likely to turn up and start attacking the prior week's high at 2750, and that would end the one-time framing down on the weekly as noted here. Secondary is a push higher, push lower, consolidate, and then start to release to the downside. Was really looking for 38.7350 as a modest target to the downside, with an extended target at 62.25, the 62.25, which was the high of January, and a low volume, a composite low volume node area right here. This is what this is, and then the expectation is it would take all of that back and finish up top, basically a nice strong base for a rally through 2750 and then eventually 45. That's what was expected yesterday. Here's what we actually got. This is a full day here. We open up a very small push higher a nice opening swing. We have a clear opening swing high, opening swing low, and then it releases to the downside, comes back in, chop, 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 as expected. We expected to chop in this prior day's acceptance area. It did test down, not quite to the neckline of this low volume node here, but it did test down early, came back into chop to 3,900 and could not take out the 3,900, consolidated, and then started to take the slippery slope down into the 3873, which got to 77 here. The 3870, 850, and it got to 77, bounced back up, and it extended the range, push back up again, and we just basically consolidated at the low, and then finally we started to build this pretty choppy back and forth channel. You can see the rotations down here are quite even in magnitude down and even in magnitude up, not even to each other, but higher on the buy side than the downside. But you could see the rotations tended to be, the counter rotations tended to be somewhere between 3 and 4 points, and the rotations up tended to be somewhere between 4 and 7 points on the way up. And it brings us back into that opening area, and it brings us back into the accepted price of the prior session to move the point of control, to shift the point of control back up. And that point of control is essentially in line with the prior day's point of control, accepting this this high volume node at the same price as we did on Monday. Basically, the market is telling us that it is accepting this area, the 38.95, 38.97 area, as value for now, as the most accepted price for now. And then we sold off into the close. We put in this lower high and immediately sold off into the close in two relatively decent impulses down. So we did not go neutral. I did expect us to eventually take out the 3,900. The 3,900 held here, 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 and here, leaving us with a low volume node right at the 3,900, and it just failed to push through. And then, of course, the end of day balance, and you could see that they were hitting pretty good on the bid to continue to extend to the downside. So that's where that stands. Yesterday, we ended up taking out the overnight stat, or fulfilling the overnight stat, right at the close. Within 5 minutes of the close, it looked like we would end up with an overnight stat yet again that is unfulfilled, but it ended up taking out the 66 quarter overnight stat. So that's the summary of yesterday. Delta down, price lower than the open. The open is here. Price finished down here. The opening delta is here, and the closing delta is well below it at negative 22,888. So price and aggression, price and delta are in the same direction. Since then, what has happened? We have traded 306,000 contracts. It was around 250,000 or 240,000 when the move had started. Quite a bit of volume went into this, but despite the high volume, now look at this. It's basically, it peaked out. The delta peaked out right here, and then it's been, price has moved a fair amount from about 38.90 to 38.53. And the delta is barely negative. This is more, if you had watched this on the tape or watched it on your DOM, you would have noticed that this thing was really moving on thin air. You could see right here, this is the tape. This is my tape that's filtered. You could see there wasn't all that much size hitting on the way down. There's a little bit of it, but it's not as aggressive as the price movement. So the delta didn't really go with this. I'm very curious to see if it's bought back up and brought back into the range, and we get back above the 38.6750, or if we were unable and we continue lower. My expectation, given how we traded yesterday, and yesterday was basically an inside day. My expectation is it's likely to test down and then come back towards that 38.80 and then again 38.98 area. So we'll see. Here's where we are on the day session on the composite. So we had this gap up or a test of the prior high, Friday's high. We tested the Friday's high and we launched from there in what basically was an open drive-ish type of day. You could see that the open and the low are at the same price on this candlestick. Drive-ish behavior pushes us back up into the 39.09. We actually got to 12. And then yesterday, we just couldn't breach and hold 3900. We had an inside day, and now the inside day is releasing to the downside, giving us this 38, 37, 38, 30 area as the potential magnet down here. And I want to see if it walks itself down in here through the 38.50 and then finds a base and comes back over the next day or so. We have non-farm payrolls on Friday. You can see the range is again starting to fall. Volume is starting to fall back off, and that's somewhat supportive of a market that is likely to either balance or chop or start to rotate up. We can analyze the living crap out of this market, but the fact is we have to respond to what it's actually doing, and we have to boil it down despite the complexity of what this sounds like. We have to boil it all down into what is it doing now and how can I position myself to take advantage. But it's all important to know the milestones: 38.30, 38.37 below, 39.09 above, with some minor areas of 38.80 and so on. And then you have your major strikes, 38.50 and so on in the way, 3900 in the way. So this is what's going on. Look at this delta again. We continue to just do better on the sell aggression than the buy aggression. This has been going on for quite some time. The cumulative delta day in, day out is just going lower and lower and lower. I'm not reading into that too much. It's too long range for me, and so I'm not considering it on a day-to-day basis. Let's take a look at what's expected for today. A lot can go on today because we are out of balance a little bit from the prior 2 days, and we are likely to see a pretty decent response today. Today's one of those days you want to be glued to your desk, in my opinion. So here we go. What are we looking for today? Given what we've done, and this is clearly an impulse down, the expectation on the open is a market that continues lower, pushes through this 38.53 and 38.51.50. This is the 51.50 here. 51.50 stock zone, carries way back, expecting it to consolidate, and then I'm looking for it to spill down into the 44 area, which is quite wide. There's quite a bit going on here, but I do expect it to find a base at some point and to impulse back up to tackle the 62, and potentially the big target above is going to be the 65, this stock zone right here, the 65, 67, before it rests. That's scenario one. So I'm looking for this impulse to continue to the downside. I expect people to liquidate. One piece of the review I didn't cover is the overview to show you why I believe that this has some staying power. The selling, I'm looking for it to sustain as opposed to becoming responsive immediately, is because it's pretty broad in terms of how it's selling off. The secondary, open, test below, reverse, come back into the 67 area and start to repair some of what it's doing here, back into the 3880 again. 3880 was mentioned a lot over the last few days, and then potentially coming back up in towards the the balance over the last 2 days at 38.95, 38.98. That is a responsive buying plan. There's a lot of room for it. We're opening in a gap lower, but we're opening in a gap into a prior balance area. Again, that balance area is governed by 38, 38, and 38.30. Okay, so there's a lot going on here. Good to pay attention right off the open. The market's likely to sing out loud as we open up. Good luck today, and I'll catch you tomorrow morning. Take care.